Well, good evening, everyone. Welcome back to the channel. Got another really exciting one for you all this evening. Fan suggested fund, the HYGW, which is actually paying very close to 21%. Now, this fund is very similar to the TLTW, which we already discussed. So let me go into the spreadsheet and show the specifics on this one. And I already have it ready today. So same scenario. Say somehow, while you work, you accumulate $1 million. You're going to retire with $1 million. You're wondering what to do with it to sustain yourself. This one is very exciting in terms of how much it pays out. So it's currently trading at $36.04 per share. $1 million invested in this at the current share price would get you 27,747 shares. The dividend over the last, now what I did, because it's fairly new, I took 6 months of history and multiplied it by 2 to get a full year. So I came up with $7.47, and we'll go into the exact math on how we did that. But 747 per share times 27 shares comes out to a whopping 207,000 per year, which is amazing. It's like you're not even going to make that working. And this translates to about 62 cents per month on average, or about 17,000 per month, or per day, $557. Now, I do want to outline the low end of the range for this fund and the high end of the range. The highest dividend this is paid out, and again, this is like a buy right covered call premium. The highest has been 78 cents in a month, and the lowest actually just came this month. So something to watch out for. The lowest dividend payout this month of 38 cents. This would drop your monthly income to 10,000 or 126,000 per year. Still pretty good, but at 78 cents, you would actually go up to 21,642 and 62 cents, or 260,000 per year, which is just off the charts. Now, percentage-wise, this dividend, the $7.47 divided by 3604, is 20.73%, which would round up to about 21%, which would garner you about $207,325 per year, which is phenomenal. Now let's go to Yahoo Finance and look over some specifics on the fund, and I'll show the exact dividends there. So I'm just going to switch screens here, and we will go to Yahoo Finance, iShares Fund. So this fund is called the iShares High Yield Corporate Bond Buy Right Strategy ETF. Again, very similar to the TLTW, which I'll link at the end. When the end screen pops up, I'm going to link that. Now, these have only been paying since September of 22. So we had a 58-cent dividend, then 78.7, 69.8, 49, 59.9, 57.6. Then this is concerning here because just in this month of March, we had a 38-cent dividend. So this could potentially be dropping. I don't know, as bond yields drop, this could potentially drop as well. So there's not too much of sample data to look at because it's fairly new. But if we go back to the fund summary, there's no after hours on this because we just closed for the week. The markets got hammered this week, by the way, with the employment number. Yeah, the last month's employment number, which came stronger than expected. As I predicted, that was going to come stronger than expected, and it's going to basically result in the Fed increasing rates even higher. So, that's going to, of course, there's nothing else it could have done other than tank the market. But this fund is 3604, so this is higher than some of the other funds we've looked at. You could get more bang for your buck in terms of shares, but again, we have to keep an eye on this one to see what it's actually going to do. So back when this fund went public in August, it went up almost to $40 a share. But the good news is it hasn't fluctuated too much. The low point was December 28th at 35.81. So it's pretty much traded in a tight range between 39.96 and 35.81. So only like a $4 per share difference, which is really pretty good. So overall, I like this one, but it's going to be, a bit of a mixed bag in terms of what's may happen in the future. But I showed the dividend, showed the performance of the fund. Now let me go, because I've had some fans suggest this, I should go to the actual fund's website. Let me see what I can find from the fund's website. We're only about 5 minutes in, so we've got plenty of time to look this one over. So this one, the HYGW, let me pull something up here. HYGW ETF. Try to go to the fund website if I can, see what all we can find. I want to start looking at net asset value and stuff like that. iShares, okay, here we go. I'll try to go for about 10 minutes today. So let's see, share screen again. This will be our third screen change. And okay, this is the article we're going to look at. Okay, the iShares High Yield Corporate Bond Buy Right Strategy ETF, year-to-date return, net asset value change, expense ratio is 1.19%, so kind of middle of the road. Net expense ratio 0.69. Why HYGW? Potential for enhanced income. They provide enhanced income compared to traditional U.S. high-yield corporate bonds by selling monthly covered call options. Diversification. This fund may outperform in periods of rising rates and widening credit spreads, which is where we are right now. Easy access. Convenient and cost-effective single-ticker access to a custom options overlay strategy on the U.S. high-yield corporate bond market. Hypothetical growth of 10,000. We're probably going to be in the hole on this one, I'm thinking, because just the way it's performed, or maybe not. Maybe this includes, how about this? From August 19th. That's interesting. So we would actually be ahead. Historical net asset values. And I've had some good commenters point out the net asset value versus the price. This is how to look if something's undervalued or overvalued. So this looks like, according to this, it's almost perfectly fairly valued. Let's see if we've got any good comments here. I've got just one live viewer. I did have two, but comments are always welcome. So that's, again, the growth of a hypothetical 10,000, and it looks like the net asset value has this one pretty fairly valued. Since we're looking at this, I want to find the same chart, if I can. I want to try to find the same chart on another favorite fund. I'm going to go into the golf fund because I really like this one. Let me see if I can find this one, because I had a good comment that pointed out that it's how it's overvalued. So now that I've looked at that, I'm going to go look at this one. So let's, while we're at it, we might as well look at this one. So I'm going to stop this, share screen again. We're going to go over to another screen. I like how this is working a lot better, actually, just, instead of multiple tabs. Okay, Guggenheim Strategic Opportunities Fund. This will be a little bit of a comparison. So closing net asset value is 1273, but it's currently trading higher than that. So, okay, that's where the commenter is getting that it's trading at a premium. So we've got to basically let it come down to net asset value if we want to buy at a fair valuation. So let's see, the distribution rate currently 12.83%, 52-week average premium or discount. So it's trading at about 25% premium. So these are really key things to keep an eye on, and I'm glad it's so easily displayed here on the site. So market price again versus net asset value. So if the net asset value is 1283, the market price is 1715. We'll subtract 1283 from this, 432 divided by, let's see, 1283. We get 33.67% if we do that, but if we times that out and then divide it by the 1715, then we get about a 25%. So it's currently trading at about a 25% premium, but it all depends how quick you want to get into something like this, because if you really want to get the dividend as soon as possible, then you've just got to pay the premium. But that would probably be, as some would say, dumb from an investor standpoint to pay the premium, when you could just wait for it to come down. But let me actually look at, let's see. Let me find a chart on this here. Performance chart. So let's look at Canada versus net asset value. Looks like 2018 we were closer to fair valuation. And let's see here. Prices. I wanted to try to find a chart. Wonder where the chart is. Semi-annual data as of 5/31. Expense ratio. It's high, but it might be worth it. All right, let me do this. I'm going to go back over here and go back to Yahoo Finance, find the fluctuation of the chart over here. Okay, let's see here. Okay, we're pivoting here. We spent most of the video talking about this HYGW, but I'm now talking about golf again because this is one that I'm actively looking to get into some more anyway. So 1670, we have an after hours price, 1698. The dividend's getting paid out March 14th. If you're not in by now, you're probably not going to get it. Let's look at over 5 years here. Come on. Okay, so the lowest that it dropped was about 1525. So it's really would have to drop a lot more to get to net asset value. So otherwise, if you're going to buy in, you're going to be paying a premium. And that's pretty easy to see there. You can just pretty much go to the ETF site and see the net asset value versus the price that it's trading at. And if anybody has any comments or any questions, feel free to leave those in the comments section. But again, the fund that we talked about in this video, the HYGW, 21%, I mean, that's phenomenal. And I'll leave on this note here. I'll go back to our spreadsheet. So I will end it on this note, going back to the spreadsheet. Just really let this sink in because I think this is our best one of all the ones we've talked about. I mean, 207,000 on this strategy. This has to be our best one that we've discussed. So look at this one here. Let this really sink in. 207,000 per year payout. So if you like returns like that, please remember to like, comment, and subscribe. The channel almost hit, well, it did hit 1,400 subscribers earlier today, but I guess someone left. So we're like right there. Just need one more to get to 1,400. So hopefully that will happen soon. Thank you all for watching. Take care. Have a good evening.